Good morning, traders. So we're just a minute before the open here on the 29th. We are looking at a down open by about 60 points or so in the S&P 500, so not massive. This is due to a strike of Israel against Iraq. But what I want to note specifically is on the diagonals. I want to take a look here at the diagonal side of the diagonal. So this part right here. And what I'm expecting to have happen, and then this diagonal over here, just to show what happens in these, I'm expecting the profitability to increase in these based on the volatility that we're going to see here on the open. So the market's going to move down, and in normal terms, that volatility will bring more profit. And it did. This one's bouncing all over, but significantly more profitable. This one a little more profitable. This one hasn't updated yet, so I'm not quite sure. Yeah, so it just dropped from 180 to 137 as well. So again, the goal, or what I wanted to be able to illustrate or show here, is that many times the fact that this diagonal has this diagonal on the downside, and diagonals are usually positive vega, meaning that they increase in value or their tents can widen out and a higher level of volatility. That's what makes that diagonal on the lower side of the diagonal a good part of that trade. And then likewise, having the call butterfly on the upper side benefits from lower volatility. So when the market moves higher, volatility usually drops. So that then allows our T0 line to start creeping up into that butterfly a little bit. So this was just an opportunity to show on a minor down move on the open. Volatility didn't spike massively, but how these trades can benefit from that. And again, that's the whole concept for me behind this diagonal, and why I like the trade is it takes advantage of the characteristics of a diagonal and a calendar on the downside, and a butterfly, a broken wing butterfly specifically on the upside. So just wanted to take the opportunity to illustrate that.